The ledger. Meaning, a general ledger is a company's set of numbered accounts of its accounting records. The ledger provides a complete record of financial transactions over the life of the company. Ledger, the principal book of accounting. A ledger is the principal book of double-entry system of accounting, which is used for recording and totaling economic transactions. The ledger is a master record of all the accounts of a business unit. It is a principal book of double-entry system of accounting which provides all important information. Separate accounts are maintained on the basis of their nature. So all the information related to the transactions may be obtained through ledgers such as to whom what is payable, from whom what is receivable, what are the position of asset and liabilities of the business. Contents of a ledger. A ledger is used to sort and store balance sheet and income statements transactions. It contains different accounts where transactions relating to that account are recorded. The ledger holds account information that is needed to prepare financial statements and includes accounts for assets, liabilities, owners, equity, revenues and expenses. Different forms of a ledger. A ledger may be in the form of a bound register or cards or separate sheets which may be maintained in a loose leaf binder. In the ledger, each account is opened preferably on separate page or separate card. Ledger and its usage. Ledger helps in preparing the trial balance and assists in preparing trading, profit and loss account and the balance sheet.
For more such videos on all subjects, practice questions and a lot more, download iPrep and learn unlimited.